I do this now? All right. Secretwars. This time we have CNR on the Toronto Stock Exchange. Canadian National Railway Co. And I just popped up that chart and it just looks nice. Look at this nice stage 2. Stage 3. Right here. Violation of the 30-week moving average. Stage 3. Oh, don't get in. Don't start shorting. Not stage 4 yet. A++ setup. Remember, you need to be below the Ichimoku cloud. Check it out. Let's do it. So here you could have been tempted to... Right here. Okay. You might have said here, my breakdown candle. Below 30-week moving average. Below breakdown line. But wait. You're not below the Ichimoku cloud. And that's for the A++ setup. Stan didn't use that. He just had A+ setup. And I believe he might have had a little less whipsaws or false breakdowns or breakouts if he was on the... If he could have waited. Maybe the cloud is just... It just helps you cheat less. Because your brain, let's say the real support was really here, this level, or let's say you're not as good to identify correctly the support, the breakdown lines. Well, the Ichimoku cloud, what it's going to do is project that support in the future, 26 periods, and after that you really have like a visual of where the support is, and you won't cheat. You won't, because Stan says you don't need close overhead or close support in case of a stage 4. And you might have just like really want to enter here, but if you respect the cloud, it's kind of it's telling you where the support is, where it's going to be, where you might run into trouble. It might breeze through it like butter, but why take that chance and just put an alert right where the support ends, like here at 70, and then you'll play stage 4 when it goes under there. Maybe it takes practice. At the beginning, you say, oh man, I want to short sell close to the top, but you need good move already to already change the trend to a downtrend. And then once you get the momentum behind you, then you get in. That's when it's safe to get in. Not when it just starts. There's a few candles that go down. Upwards trend is finished. Stage 3 is finished. We're in stage 4. You don't want that. That's why Stan says there's always a good 50% move before you could enter the stock that has to move. And that's not lost profits, guys. That's increased profits in the sense that you're increasing the probabilities of reaching a possible positive target. That's increasing your chances of making money, not lowering them by waiting for the stock to move a good percentage before you get in. It just, maybe it's counterintuitive when you start, but the more you think about it, the trend is your friend. Oh, look at that. It just bounced back off that support here. See all those wicks below. The price always closed above. So right at this stage, you would have been trapped. You would have maybe been triggered out, or you would have just lost time being in a stock, having your NAV invested in a stock that's not giving you a straight breakout. Remember here, I just have the ADX for a trial purpose. I'm not using it to trade by any means, the Stan system. I'm just using it to see if a value below 20 is equivalent to a stage 1 or stage 3. And eventually might create a scanner where I'll be basing it off those ADX values. You see, here we go. Now the RDX can go under 20. And we're still in that stage 3. Or beginning with stage 4, but not a super duper strong stage 4, right? See, the price action keeps going back up. And it's just time to wait just a little bit more. And oh, wait. You're still in stage 3. So now the cloud would have saved you from the breakdown. Now you have a clear image of where the support is. So unless you get a close under 70, you do not want to get in. You don't want to short this. Stage 3 is flattening out. Nice flatten 30-week moving average. And now the support is starting to dissipate and the resistance has a little bit. But you could either break out to the upside or downside. See, now so you're close to the 80 level. A little bit more. Here is your new lines. Chart has morphed. These candles, adios. And that's what we're dealing with right now. Our side, ADX is still under 20, so this would have been, and this is still stage 1 or 3. What's that? Stage 2 to stage 3. That could continue to stage 2 or go back to stage 4. And we're just in a wait period. Oh, this had been a breakout. This could have been a breakout right here, this candle. But look. Okay, Stan, triple confirmation. Breakout above 30 moving average, above the resistance line. Check. So right here. See, that's look at that, the volume. That's like the volume aspect that twice the average of the previous 4 to 5 weeks. I always seem to want to cheat that and not respect that and still go, but it's really crucial. Volume on stocks is crucial. It tells you a lot and you have to recognize it. You need strong volume on breakouts or breakdowns in the direction you want, and you want shrinking and contracting volume on pullbacks. If you have those two, it's healthy, nothing to worry about. If you have the opposite, not good. And you see now you have increased volume on a red candle, not good. So the price action is, you don't have the triple confirmation. And did you have the RSI? You had the RSI. It's starting to go up, kind of flat. What you really want to see is the RSI like this going across the halfway point. So here's this breakdown. Almost had the Stan Weinstein A+ setup. The volume, well, not twice, maybe 20%, 30% more than the previous 3 to 4 weeks. Not super, but you had the RSI going down. You had the breakdown. So that was like a plus or just A setup. And the plus would have been even more volume on the breakdown candle. And the A++ would have been below the support cloud, the Ichimoku support cloud. There you go. Wow, still stage 3. Okay, do we have another breakout here? Let's check it out. Okay, now we know that the support's a little bit higher. See, chart morphs, telling you more signals. And right here. So this is starting to draw out. Okay, here we go. This is a hard one. It's making you work. Is this a breakout? Not really, right? Look at the volume. Same thing. Volume's not going up. The RSI is not going over the halfway point. Still in positive territory, which is okay, but not A++ type material. And you have the breakout above the 30-week moving average, above the resistance line, going up. So if you had the volume, you could probably decide to go. You have to wait for the volume. And oh, okay. Are we going now? See, I'm adding volumes, but you don't have the high volume on the breakout candle. You can't force it. You can't force it. Sometimes try to fit the framework to the chart, or the chart to the framework. If the chart's not giving you the signal, it could go up, but you really have to wait for that A plus setup with the volume. Okay, here we go. So was this it? That was on a downwards candle. So what happened there? It gapped down and then moved up. It's hard, the entry. The only entry I could have seen maybe was this candle, but it's hard because not a breakout candle. Did we have a move right here on a continuation breakout? Let's see this candle right here. This candle right. Okay. So continuation breakouts, from what I've observed and from the drawings in Stan Weinstein's Secrets for Profiting in Bull and Bear Markets, continuation breakouts, price goes up and there's consolidation here and then it goes up, but you're really far away from your 30-week moving average. The ones I've noticed that really work well is the price action goes up, then you have a sideways move getting closer to 30-week moving average, and then it breaks, it like bounces off that and goes up. Those are the ones I've noticed that have been doing very well. RSI, okay, it's not going through the halfway point. It's in positive territory. You could have maybe entered there. And we have one, two, three. Here you have your trend line. No matter if you would have entered here, even if you didn't have the volume, or here, you still have that trend line that applies. 1, 2, 3, and here you would have taken half of your profits, and the other half, I have difficulty seeing where there's a pullback and the price action goes back up. Either case, on the 30-week moving average violation, you would have taken the rest of your positions off. And look at that, another trendline violation, another sideways move, either reversal, slows down, and you're just going to save a lot of time getting out when that trendline violation is happening. And look at that, Ichimoku cloud. Okay, 30-week moving average is pretty cool. It goes up. It tells you the trend, up or down. Ichimoku cloud, another visualization. If the price action is above, then you're in an uptrend, above a green cloud. And if you're below a red cloud, you're in a downtrend. And here you go. Oh, okay, is this a breakdown? Here we are today. Here's the top. Okay. Here at the 105, I could put my alerts for CNR right here, 105, to right here in case of a stage 3 continuation. But right now what happened is you could have said, I have a breakdown right here on this candle. This one right there. And what's the volume associated to that candle? This one right here. So look at that. That candle has twice the average volume of the previous 4. Let's look at the super duper RSI. RSI going over the halfway point cleanly, going down into below 50. That's how I like them. And below 30-week moving average, below, zoom in, below 30-week moving average, below the resistance, the support, sorry. And the A+. Stan Weinstein, you read the book, you see that, A+. Stan Weinstein, how is it going to be? You don't see that, you don't see that. And you just say, man, this is the best. Put my sell stop here as a trader, a buy stop. Entry right here as the sell stop, and traders That's the investors' sell stop. Traders, you could put it 4 to 6% above the breakdown line. Or what I like is just putting it above the 30-week moving average, above a round number. So if it's 102.50, 102.55. And you could have just shorted there. You have pullbacks. See, pullbacks on lower volume, decreasing volume, and then increasing volume on the way down. Pullbacks going back up on lower volume. So this is very, very healthy. Stage 4. But we would have not entered because, it just happened in this case. Maybe it didn't get whipsawed and it really it worked its way through the cloud. But now you have this candle here that closed below, and that's a true break, true stage 4 breakdown. Right now, what we could do, we're in the week, we could wait maybe for the week to end, see how it goes. If it's gonna stay below that trend line, try better. 1, 2, 3. We're starting to do it. And you could, on the pullback, on low volume, decreasing volume, you could probably enter here. I'm probably going to wait till maybe Friday's close. And if we're still above that trend line, below the trend line, you could short. It's a definite stage 4 right now. And after that, where would I enter? I would enter right here and put the sell stop above the honestly, what I would rather like, instead of entering it here, I think I would rather like to have a weekly close below this candle of 5 volume. Just as we have with the continuation breakouts, this would be continuation breakdown like this. And don't try to guess where it's going to go up here. What you want is what I want is a close below 91, and a close below 91 right here. I would enter, and I would put my sell stop above the breakout, the continuation breakdown pattern, which could be right here. So this is the pattern. So enter here, or whatever that candle is going to end. Investors put their sell stop, their buy stop right above the pattern. And the 30-week moving average, well, it's kind of deep in, so I'd put the traders and investors above that support, that resistance, and then move on from there. But right now, what we need is a close below 91. And on high volume to enter. Because I remember Stan in his book says on pullbacks, you enter the stage. Okay, stage 4. Let's go. Let's do a little reverse. Where was I? Stage 4 breakdown. Price action pulls back, goes back towards target. You see it right here, like the V. Now it's inverted V because we're breaking down. And when the price action starts going back towards the... there's not a lot of volume on this continuation candle. I would have liked to see right here on this continuation candle, I would have liked to see a lot of red volume. There wasn't that much. But there's still even less volume on the green candle going back up. So on the pullback and the price goes back towards, you could have entered here on the pullback. If the pullback's on low volume, like here, you could have entered right here once again. So initial breakout, pullback on low volume, and it was a safe bet to get in back here. So that was our first chance, was here. But since we're waiting for the cloud want to be through the cloud, we didn't do that. Pull back here, but since we're still below the cloud, we didn't do that. So now we're playing this pattern right here as a breakdown. Pull back on light volume, So was my first assumption that this is a good place. Ah, God. If I had a stageanalysis.net there I'd give him a buzz right now. I'll remember that as a question. I'll try to ask it on the stageanalysis.net, see what the guys, how they would have played this. Else, maybe they're going to watch this video and comment. If this is a good place to enter. Worst case, maybe this is could have been a good place, but I think I would rather wait for a continuation move right there. All right, it's hard stuff, man. That's what I call emotional landmines. If you don't have an exact plan for an exact action that occurs, your brain starts trying to reason it out, and then you could start rationalizing stuff, and you don't want to go there. I'm just gonna go look on my monthly candle. Now I had this theory that, or there was the A plus Stan Weinstein setups, the A plus plus if I add the Ichimoku cloud, and now I had A plus 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 setup where I had a corresponding breakdown on the monthly candle chart, and I do just a pure. This is my classical trading framework. I draw my resistance and support of the opens and closes, and right here this is my breakdown candle. So right now this is a definite breakdown. You have the 30-week moving average going down. The thing is, the target on the has already almost been attained. There's a rule that a tight formation, this monthly candles 1, 2, 3, 4, 5, 6, 7, 8, almost 1 year. If it's less than 10%, 8 to 10%, so right now 98 to 105, that's less than 8%. The target for those tight patterns is triple the regular one, triple bonus. So it'd bring us all the way down here. You might hit some support here. This is previous resistance turn support, what I call a wall. So you might just reach this one here and then have some noise, have a long wick, and then the price action goes back up. But who knows what's going to happen there. It's just a question of increasing, considering targets, obstacles on your target to position yourself on the good side to have increased chances of reaching it. But this price action, this close below that important level, is giving me the go-ahead for the stage 4 play on for CNR. All right, I'll check you back at the end of the week. I'll send in a few alerts to see if the price action where it fluctuates this week. But definite play right there. All right, guys. See ya.